Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. U.S. stocks ending the week, hitting new highs with the Fed's new approach to inflation rippling through global markets. And deal making is in full swing. Oracle, along with Microsoft in a partnership with Walmart, have both submitted bids to buy TikTok. Competing offers have been made. And new tonight, we are hearing that the global investment company Centricus and social media company Triller have been planning a $20 billion bid for TikTok's assets themselves. That's something we're going to continue to follow this as the president's deadline of mid-September approaches, or he's threatened to ban the app. Meantime, the ongoing lawsuit between Apple and the maker of Fortnite, Epic Games, continues to heat up. Apple saying it has now terminated Epic's developer account. We're going to have more on that later this hour. But first, Bloomberg's Abigail Doolittle has a recap of the markets today. Lots going on. Obviously, Abigail, the Fed, the Prime Minister of Japan stepping down earnings, the ending of the Republican National Convention. Walk us through how this impacted the day.
So much, Emily, and all of it, not surprisingly, ended in record highs, at least for the NASDAQ and the S&P 500. So investors very encouraged by the Fed's latest policy shift, really the idea that perhaps it's reinflationary in nature, so stocks responding in kind. Apple, as you were just talking about, this is sort of interesting because over the last 2 days, Apple is underperforming, down over the last 2 days, more than 1%, closing down just a little bit today. And as you were mentioning, right now, terminating Epic's developer account in the midst of the lawsuit as Epic refused to pay the 30% fee. You know, the fact that Apple is standing up for that, along with, I believe it's Alphabet, shows that they are going to really force developers to comply with the rules. It'll be interesting, of course, to see how this goes on. I'm not certain how this would impact the bottom line for Apple, but it must not be all that much that they are standing their ground as much as they are. And you were mentioning Shinzo Abe, the resignation of Japan's the head of their central bank, resigning. The yen was up sharply. In turn, that was one of the reasons the dollar was down, one of its worst days in a few months. You also had the Australian dollar and the New Zealand dollar up more than 1%. So lots of volatility there. The dollar down, Emily, caused the Bloomberg commodity complex to pop. Net, this is risk on, even with Apple's small decline. Now, you were mentioning the RNC. I don't think the market moves we're seeing today had too much to do with that. But you do have to consider, if President Trump wins, I know he is behind in the national polls, but if you take a look at the markets, an index of highly taxed companies in orange relative to low tax companies in white has started to gain. And of course, Joe Biden plans, if he is elected, to raise taxes. The corporate tax would go up to 28%. President Trump not only passed a tax cut back in 2017, but last night talking about the possibility of more tax cuts. So this suggests some investors think that President Trump may, in fact, have a serious chance of, pulling what he pulled in 2016, basically a surprise win at the last minute, considering that these high tax companies are doing better. It implies that maybe high taxes aren't going to be coming anytime soon, or higher taxes, I should say.
Interesting. Well, of course, we've also been following the hot chase for TikTok, Microsoft, Walmart, and Oracle, all ending the day in the green. We are standing by potentially for news on this in the next 48 hours. Our colleagues have broken some news that another couple of companies, Centricus and Triller, might also be submitting a bid. Talk to us about the back and forth there.
Well, it's really stunning. These TikTok assets, the potential there, because as you know, Emily, in the U.S., only 80 million users. In the whole world, TikTok has about 800 million relative to Facebook, I think, at $2.6 billion. So the fact that you have these huge companies going after it with so much zeal potentially points to the sort of potential that there is longer term. And of course, earlier this week, yesterday, I believe, or the day before, Walmart and Microsoft. Walmart perhaps wanting in on India more because TikTok's second biggest market is India. Microsoft up on the week. Walmart up on the week. Oracle also up on the week. And as we've talked about before, Oracle may have the advantage of Larry Ellison supporting President Trump because of the political angle to this. But now this latest consortium that might put in a bid, Centricus and Triller, the social media platform with that asset management giant, possibly a $20 billion bid. It seems as though this story is just going to keep on going and going. It will be very interesting to see what the result is and how soon we do, in fact, get some potential news around this, Emily.
All right, Abigail, thank you so much for breaking that all down for us. Have a wonderful weekend and happy Friday. Continuing now on latest TikTok developments, investors still trying to get their heads around a potential partnership with Microsoft and Walmart. Oracle still very much in the game. I want to bring in Bloomberg's Kurt Wagner, who's been following the story. And Kurt, I know we have this new development from Centricus and Triller. Also heard earlier from a source close to the deal that could go either way at this point, Microsoft, Walmart, or Oracle. They both have an equal shot. Is that what you're hearing?
Yeah, it really depends on who you're talking to, Emily, because there's so many people involved now in varying degrees that we're kind of hearing a little bit of everything. It seems very clear that Walmart, Microsoft, and then Oracle are clearly the two front runners. You mentioned that Centricus bid that we were just writing about today. That feels like quite a Hail Mary at this point to me at this stage in the discussions. But again, it really depends who you talk to. I saw a lot of people who thought that after Walmart came out publicly yesterday to join Microsoft, that kind of put them directly in the driver's seat. But as you mentioned, there are other folks who think Oracle is here. So unfortunately, your guess is probably as good as mine at this point, especially with an administration like the Trump White House that tends to change its mind very quickly.
What about this Centricus Triller development? Is this solid?
Well, it's solid in that it's a real bid. I think the challenge is going to be just this check the boxes that the White House has been demanding, right? So part of that is that they want a U.S. company to really own the U.S. business of TikTok. Centricus, as you know, is based in London. It's obviously a global firm, but based in London. And Triller is not a large company like a Microsoft that could really come in and probably handle a lot of the data issues that are a concern to the White House. That is something that Microsoft has been saying, that it could, protect the data of U.S. users, that it has those technologies already set up and running. And so those are the types of benefits of going with a much bigger player. The bid is real. To me, it feels like a very big long shot that Centricus would be a winner here.
So how soon do you think this could be wrapped up? I mean, yesterday it was within 48 hours potentially. Now we've got 24 hours left in that window. I mean, how soon could this happen?
I think it could happen very soon. I mean, we are basically preparing to be ready over the weekend in case something were to happen. Certainly, we were told yesterday that it could happen within the week. But, the fact that Centricus and their bid just came out today, just actually within the last 30 minutes, is a sign that this is still evolving, right? And so it is possible that this could take longer, but we're anticipating or certainly on a call, if you will, that this could happen very quickly.
What happens after a deal gets announced?
I think this is where it becomes most complicated because my guess is that they'll announce some kind of agreement but still have a lot of the nitty-gritty details that they have to figure out. I mean, essentially, what they're doing is creating an entire new entity, right? There is no U.S. TikTok right now. There is a global TikTok, and they would be carving out that U.S. business. So I think it would be interesting from a corporate standpoint, which employees are going to be coming over with the new entity, which ones will stay with ByteDance or with other versions of TikTok, what's going to happen with the management team, what's going to happen with the board. Like, these are all the types of things that happen when you are basically creating a new entity. So simply announcing who wins this deal is step one, but all of those very specific and important details are going to take a lot longer to figure out.
All right, Bloomberg's Kurt Wagner on the story for us through the weekend. Kurt, we will check back in with you on Monday for the latest. Now to someone else who is closely watching the TikTok situation evolve, Microsoft co-founder Bill Gates. When I sat down with Gates earlier this month, Microsoft had freshly expressed interest in TikTok. Gates said the company's assets would be in good hands.
Microsoft is very careful about its data promises, and we'll try to have strong relationships globally. We won't do things that are hostile, are viewed as hostile.
My conversation with Bill Gates on an extended Bloomberg Studio 1.0 airs tonight at 7:30 p.m. Eastern Time. Do not miss it right here on Bloomberg Television. Coming up next, a lesser-known beneficiary of the pandemic, the cloud computing company Okta. Its stock has doubled since March. We'll speak to CEO Todd McKinnon next in an exclusive interview on the back of the company's earnings results. That's next. This is Bloomberg. The COVID-19 pandemic, for all its human and economic tragedy, has spurred a huge opportunity for tech innovation. The cloud computing firm Okta is one of the success stories fueled by the work-from-home boom. The company reported strong second quarter results this week, and the stock has doubled in price from the start of the pandemic. But Okta CEO Todd McKinnon, who became a billionaire on paper in the last 5 months, says there are some headwinds ahead. He joins us now for more in an exclusive interview. Todd, thank you so much for joining us. So first of all, taking a step back, what have been the main drivers for growth that you've seen over the last 5 months?
Well, I think the last 5 months, it's been an amazing, crazy ride for everyone. And the main part of our business has been what's driving it for many years, which is more companies are using more cloud applications. They're using technology to transform their own customer experience, make better websites and mobile apps. And finally, they want to do it all securely, and we're able to help them do all three of those big, important things, which is why we're in the fortunate position we're in.
So let's talk about the headwinds. You did say on the call that there were some headwinds ahead. What specifically are those headwinds in the second half of the year?
Well, about 11% of our customers are in what we call directly impacted industries, things like entertainment, resorts, cruise lines, things like that. So those companies are definitely having a hard time in COVID-19. So that's a little bit of a headwind, and that's kind of been offset with just everyone else rushing to support remote work. For example, we were able to support FedEx in a go live of 36 hours, where they moved 85,000 employees onto Okta so they could effectively execute their company and support remote workers logging in to keep that business running. So that's been a positive. But again, these impacted industries is a little bit of a headwind. And then I think, like everyone else, if we look out the next 6 to 12 months, there's macroeconomic questions. You know, what happens to the economy as things evolve? And I think we're being prudent to make sure that we make the right decisions in that context.
I talked to your former boss, Mark Benioff, the CEO of Salesforce, earlier this week, and he said it is the end of software. Everything has moved to the cloud. Would you agree?
It's a powerful force. Yeah. I mean, companies want fast time to value, and they want flexibility. And if you think about COVID-19, there's no better situation to demonstrate the power of the cloud. It's flexible. You can work anytime, anywhere. And it's helping companies really make the best of the situation, which is pretty poor situation for the world overall.
So let's talk about, obviously, Okta's market cap has soared, $27 billion, certainly big enough for deal making. What are your thoughts on M&A right now? What are the white spaces in terms of your own product portfolio that you might be looking to fill? And would you be open to some significant size deals?
Well, we look at M&A from a customer-centric viewpoint. We've always been that way. We as the company evolved, we listen to customers, and where we've innovated. In fact, like a big innovation we've done recently is we really have turned the Okta Identity Cloud into an extensible platform. Customers want to be able to use the different components of the Identity Cloud in flexible ways to support all of their business processes, whether it's employees logging into the critical work applications or their customers logging into our customers' websites. And so that's our approach to M&A. We're looking for things that benefit customers. It's not, I think one of the mistakes companies make about M&A is they kind of look at it from a financial spreadsheet perspective, and they don't look at it in what's good for customers. What will actually be better for customers if it's delivered by Okta combined with something else? And I think that's a powerful lens, and I think that informs our perspective.
You've said that you plan to let employees work from home permanently if they want, and we're hearing from some CEOs actually that they're not open to this. They want their employees to come back to work. What sort of trends are you seeing in worker productivity? Are workers as productive at home?
Well, one interesting thing we've seen, Emily, is that so we can, as we monitor our service and we make sure it's reliable and scalable, we can see the aggregate usage patterns of users logging into their work applications. And we've seen some pretty incredible things. We saw a 27% increase post-COVID over pre-COVID of people logging in at 4 a.m. So it's like 4 a.m. People are getting up and working at 4 a.m. And we've also seen an increase in people at the end of the day, on the other end, about a 30% increase of people logging in at 1 a.m. So people are working very hard, and then they're doing this while they're also taking care of family responsibilities. We've seen a decrease of logins, in the 1 p.m. to 5 p.m. Era. So you talk about people rallying and trying to make the best of a tough situation. We're seeing that flexibility. It's the flexibility that the cloud could bring to give people that adaptability. So that's a pretty interesting phenomenon we're seeing.
Now, we're preparing for a spate of tech IPOs later this year: Airbnb, Palantir, Asana. I'm curious what you think about some of these companies that have waited so long to get out of the gate, perhaps too long. Do you think they should have come out sooner? And do you think we'll start to see the pendulum swing back where companies go public perhaps earlier than they're going public now, more like Okta chose to do?
I remember, so we've been public about 3.5 years now. And I remember when we were making the decision to go public, I was the word or the rumor or the concern people had was that, once you're public, it's hard to, your investments are constrained or it's hard to innovate. And I found that to be not true at all. I found to be our experience as a public company to be, we're in really strong alignment with our shareholders. And we've been clear with them and consistent with them that we're going to invest for the long term, that we have a stable, predictable, reliable business. And I think it's really been an advantage to be public. You mentioned M&A. We've been able to raise a significant amount of capital to give us a good war chest for M&A. We've been able to have a higher visibility with our prospective customers to make the brand, to bolster the brand. So my advice to CEOs of companies that have stable, predictable, reliable businesses is that there's a lot of advantages to be public, and I encourage them to make that step.
All right, Todd McKinnon, CEO of Okta, thank you so much for joining us today here on the show. Okay, coming up, Nerdwallet makes an international splash by scooping up a UK startup. We're going to cover that story later this hour. More of Bloomberg Technology after this quick break. The consumer finance resource destination Nerdwallet is making a leap into international waters, buying Know Your Money, a UK-based comparison website. For more on the acquisition, Nerdwallet CEO Tim Chen is with us on the phone. So talk to us about how this acquisition, Tim, expands what Nerdwallet can offer.
Yeah, Emily, our vision is a world where consumers make financial decisions with confidence. And given that we're growing and profitable this year, we thought it would be an opportunistic time to expand into the world's second biggest market. The UK is very well versed in financial comparison shopping already, but we thought there was a big opportunity to also bring content and helpful tools and calculators to the market as well.
So talk to us about what insights you're getting from consumer behavior based on the information that you have about customers' financial moves right now.
Yeah, so we're clearly in a time defined by the pandemic as well as government stimulus. We're seeing a ton of interest in things like life insurance, refinancing as interest rates are coming down, especially on the student loan and the mortgage side. And we're also seeing a big headwinds in terms of interest in travel credit cards and things like that. And then the other interesting trend we're seeing is just huge amount of interest in getting into the stock market. I think the stimulus checks, as well as the rise and fall of the stock market, is having a big impact on retail demand. So we're seeing record numbers of people signing up for, the free trading accounts that are available now as well.
So what are your plans for future growth, especially given that if there's only one thing we know for sure about the future, it's that there's more uncertainty ahead?
Yeah, there's certainly more uncertainty ahead, but in fact, we're seeing a pull forward in this offline to online trend and consumers finding financial services online. So we think there's many more countries ahead for us, and we're also thinking more about getting deeper in a lot of the verticals we're already in. We think there's a lot of opportunity to just make money easier for a lot of people.
So what do you see ahead? Obviously, there is a lot that we don't know, but what are you planning for as you map out your strategy and scenarios for the company's future?
Yeah, so, we've always felt it was important to maintain a lot of financial discipline in terms of how we invest. We've really only done one round of financing historically. We try to run at a really healthy margin. And I think that's really important because during times like, 2020, we can be more opportunistic about finding great investments and, finding teams with a lot of aligned missions, such as Know Your Money. So we're definitely still very active in thinking about what's next there as well. We're also investing really heavily in our membership experience. We think there's a big opportunity to democratize financial advice to everyone. And that really starts with understanding a little bit more about our consumer so that we can nudge them when they should do smart things with their money.
And what about your global ambitions given this new acquisition? What does that look like?
Yeah, so, it's going to be a long road ahead. We have a very long-term orientation. We're thinking 10, 20, 30 years ahead. So we're definitely going to learn a lot of lessons entering the UK. It's our first international market, but there are many other markets to enter as well. Each market is quite different. For example, there's a big focus on car insurance comparison there, as well as energy shopping, which are less prevalent in the United States. And I think there's many differences in many other markets as well. So we're going to keep an eye on those.
All right. Tim Chen, the CEO of Nerdwallet, thank you so much for joining us. Good to have you here on the show. Coming up, Apple taking a tough stance in its dispute with Epic Games, terminating Epic's developer account, the creator of Fortnite, in a continuing lawsuit. Details next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. Back to our top story on the battle royale between Apple and Epic Games, the iPhone maker, saying today it has terminated Epic's developer account in the midst of a lawsuit. For more, I want to bring in who else but Bloomberg's Mark Gurman, who covers Apple for us. So, Mark, tell us about this latest twist.
Yeah, so the latest twist is Apple following up on the threat it made 2 weeks ago to remove the developer account for Epic Games. So what that means is, in addition to Fortnite no longer being on the App Store, it means Epic won't be able to do app updates or new app submissions. It means there are a few other games and little applications on the App Stores will also no longer be available as of today. And lastly, it means that users who already have Fortnite won't be able to make in-app purchases through Apple's system. So we knew this was coming, but now it's interesting to see that Apple went ahead and did it amid the lawsuit.
So what does this mean for Epic? Is this a blow?
This is definitely a blow for Epic. I think it's another showing from Apple that they're not just being all talk here, that they're actually following through on this. What Apple's saying today is that any other developer who would have violated the guidelines would have been given the same 14 days to comply with the App Store reviews, and they would remove their account. So not removing Epic would have been an exception. The one win here for Epic is that Apple did not remove a second developer account that Epic uses to develop Unreal Engine, which is gaming frameworks that Epic uses for its titles, but lots of other developers use not only on the iPhone, but other consoles as well. And so the judge ruled earlier in the week that Apple wouldn't be able to remove that account, and Apple complied with the judge's ruling and didn't remove that.
So what's next?
Yeah, I mean, there's going to be another hearing in mid-September where this conversation is going to continue. Epic is continuing with its lawsuit and needs to convince, other judges or ultimately a jury in the spring that Apple should be able to reinstate Fortnite and also shouldn't make app developers, pay, 30% for in-app purchases in particular games. So this is going to drag on for a while, and it's going to be interesting to see if Epic or Apple bites first to see who the impact's going to hit. I mean, there could be a situation where Apple gets so much heat for not having Fortnite that they ultimately, put Fortnite back on the App Store as an exemption. I'd be very shocked if that happened. More likely, if anyone's going to bite, it would be Epic saying, we really need this revenue and we're going to put it back on the App Store. I mean, I have a stat here that just hit my inbox that, Epic since 2012, their apps on the store have been downloaded almost 160 million times. Which generated $1.2 billion in consumer spend and $360 million for Apple. So over the last 8 years, they've made, nearly $1 billion off the store. And, 6 months of that revenue loss is considerable.
You spend a lot of time talking to developers. Do you have any sense of where developer opinion is landing on this? And could any other companies try to mount a case against Apple?
Yeah, I mean, it's a mixed bag. On your first questions, a lot of developers that I talk to and see online are really complaining and sort of against Apple in this fight. Other developers like to see that Apple is applying these guidelines almost uniformly, right? I mean, there are some exemptions such as the Amazon situation we're aware of and some other applications, but ultimately, for the most part, Apple's treating Epic Games like it would treat any other developer. They're not necessarily treating them well, but it's uniform. On your second question, I don't believe any other developers, unless they're big, huge companies like Epic Games, are going to go after Apple. A small developer, probably can't afford to see their entire app get wiped out because they're taking Apple to court, plus all the legal fees and such. So I'd imagine these are going to continue, but they're going to be big names, not some of the smaller development shops.
All right. I'm sure there'll be more twists and turns next week. Mark Gurman, as always, thank you so much for stopping by. All right. Well, Amazon is looking to achieve net zero carbon by 2040, adding 1,800 electric delivery vans from Mercedes Benz to its European fleet. This on top of 100,000 electric cars from Rivian that are supposed to hit the streets in the U.S. next year. Kara Hurst, Amazon's head of worldwide sustainability, joined us to talk for more insight into the partnership. Take a listen.
We are really excited to add more than 1,800 electric vehicles from Mercedes Benz, and they will begin making deliveries to customers in Europe this year. This is part of our overall initiatives on the climate pledge, which Mercedes Benz is also joining us in signing. So that's another big, exciting thing that we would love to talk more about, our mission to meet the Paris Agreement goals 10 years early and to become net zero carbon by 2040.
Tell us about that plan to get to net zero carbon by 2040, one full decade ahead of the Paris Accord.
Yeah, exactly. We think that the science is telling us that urgent action is needed on climate change. We know this from what we're seeing, both that the pace of climate change is accelerating on the planet, and also the effects of climate change are more devastating than we had originally anticipated. So we looked at that science. We looked at our businesses, our operations, our ability to innovate, and our ability to be a customer of new green technologies, products, and services. And we said, we think we can go faster and send a really strong signal that we want to be more ambitious on the fight to slow climate change. And we want to also think about inviting other companies in to do that with us. So we have begun to make a number of operational changes. We've begun to think about the types of products and services we need. And in 2019, we established the Climate Pledge, which was an invitation for other companies to come in on that level of ambition and additionally commit to reaching net zero carbon by 2040.
Bill Gates just told us he thinks that climate change could be a worse disaster than COVID. Talk to us about the response from other companies that you're getting, and why bother focusing on other companies when Amazon is such a huge company and has its own work cut out for it.
Yeah, that's a great question. I mean, we see the ability to use our size and our scale for good. And we know that with climate change, it is such a complex problem. There's, more and more we're learning every day about some of the things that are going to be needed, natural climate solutions, along with technological innovations and business changes. We need governments to come along with us. We need the NGO sector. We need other companies. And so we really, in order to slow climate change, in order to address this very complex and global challenge, we're going to need all types of partners. So while Amazon has a lot of work to do to begin to use our size and scale for good and to become a customer of these products and services, we want companies in every single industry to be thinking about this, to be driving at these kinds of changes, to be demanding policy changes, and partnering across multiple sectors to address this really urgent issue that I think Bill Gates is right. It hasn't gone anywhere, even though we're in this very crucial and important pandemic moment. Climate change is continuing to kind of, evolve on our planet, and we need to address it in a really rapid pace.
So you're adding these EVs to your fleets around the world. You said you are going to be ambitious about this. What else are you doing to make dramatic changes, to make your delivery operation more sustainable?
Yeah, we're looking every day at how we can increase the sustainability of all of our operations, including our deliveries. And so that means things like ordering these 1,800 vehicles from Mercedes Benz. Of course, we also have ordered 100,000 new electric delivery vehicles from the U.S. car-based manufacturer Rivian as part of these climate pledge commitments. And all 100,000 of those will be on the road globally by 2030. We're also looking at packaging initiatives. We're looking at our optimization of our routing, and we look at how we utilize our transportation, delivery, and logistics network to increase the sustainability of our operations. We've also done research to understand more about how e-commerce is truly more sustainable as a business model. So we're looking at this from all angles.
Meantime, as we're speaking, Hurricane Laura is devastating the southern part of the United States. You've got fires burning across California. The air outside my window is filled with a smoky haze. How are these extreme weather conditions impacting Amazon's operations?
Our primary goal is to keep all of our associates safe. So we have a number of our leaders looking at this on a daily, if not hourly basis at this point. We also have a team that is Amazon in the community that will, does a variety of disaster relief functions. And we are looking from my lens in sustainability always at these types of events and figuring out how we can better understand climate change and how we can increase the resiliency of our operations to continue through whatever we're presented with to be able to deliver to our customers when in fact it is safe to do so.
My conversation there with Kara Hurst, Amazon's head of worldwide sustainability. All right, coming up, a march on Washington today for societal change in the face of unrest and racial tensions across the United States, including the recent shooting of another unarmed black man by police in Wisconsin. To talk about the call for change in boardrooms as well. And at the top of the U.S. government, we will have a special guest with us next. This is Bloomberg. The national conversation around race and inequality has been front and center over the last few months, most recently heightened by protests over the shooting of yet another unarmed black man, Jacob Blake, in Wisconsin. While the U.S. population is 13% black, just 4% of venture capital is black, and that is according to data from the National Venture Capital Association in 2018. The lack of diversity also apparent in fintech, where there's a scarcity of black regulators. Joining us now for more, we've got Chris Brummer, Georgetown law professor and host of the FinTech Beat podcast. Chris, thank you so much for joining us. First, I want to start with, this has been obviously a devastating week for so many people and for our country, and especially for the black community. What has been going through your head and your heart this week as we are grappling with the shooting of yet another unarmed black man and the reigniting of protests across the country?
Well, I think like a lot of people across the country, I'm thinking about what I can do and what society can do to address these problems. These kinds of challenges are challenges that involve everyone, and it really requires everyone to pitch in whatever way that they can. And I, as someone who participates very often in the fintech community and in conversations involving finance and technology, and frankly also with the regulatory community, I see that there's a lot more that can be done. And just as I see these things that not just give me cause, but they break my heart, they also energize me just as they energize many other people to try to find and seek some solutions.
Now, as you've pointed out, Black employees are underrepresented across corporate America. Black executives are underrepresented. And you've also done exclusive research on the lack of representation among financial regulators, which is obviously a really important job and has a huge influence on economic policy in the United States. What exactly have you found?
Well, when you look at the history of financial regulatory agencies in the United States, going all the way back to the 1930s and to the 30s and mid 40s, the diversity of our financial regulatory agencies has been, frankly, appalling. And when you think about really what a financial regulatory agency does, I mean, this involves devising policies that pertain to the protection of investors, policies that really speak to how do you allocate capital and help to create access for people who are participating in the economy. When you don't have everyone participating in that conversation, it can lead to the same kinds of subpar outcomes that you have when you have a lack of representation when it comes to people trying to devise financial products or who are trying to think through investment decisions, such as in the venture capital community. And I think that when you have a conversation about access and when you have a conversation about innovation, that conversation can't just be a private sector conversation. If you really want to get something done, it has to be a public sector and governmental conversation as well. And again, those numbers have just been appalling, with only 10 regulators, 10 out of approximately 327 who have ever been Black, less than 3%. And the government can and should do better.
Now, as you look forward, certainly we've got even more uncertainty ahead. What is your outlook for an economic recovery, knowing that there are so many families out there who are in pain, knowing that this will disproportionately impact negatively the Black and brown community?
Well, it seems to me that the conversation has to be about having people, to paraphrase Hamilton, who are in the room where it happens when it comes to devising both the financial products and services, as well as the policies for these communities who are being disproportionately and negatively impacted by the coronavirus and by the economic hardship that the virus has unleashed. And when you think about the recovery, and you think about how uneven that recovery has been, there are a number of solutions that are right now being discussed, that are being considered, both again on the private sector as well as on the by governmental authorities. Questions about payments infrastructures. Questions about how do you think about monetary policy and what kinds of rates should one use to target monetary policy and to devise monetary policy. Questions that have to do with protecting people from charlatans who may be selling snake oil, but also conversations involving ensuring that everybody has access to top flight financial and technological services in order to participate in this economy and in the recovery. And again, those kinds of conversations have to have people who are both sensitive to more than one community and to the diversity in the American economy, but also people who have a lived experience with both the upsides and the failures of the legacy regulatory and financial infrastructure.
All right, Chris, I'm so glad that you're raising the alarm about this. Thank you so much for sharing all of that with us. Really important to think about the how all of this cascades and can impact so many different parts of our country, depending on who's making those decisions at the top. Professor Chris Brummer of Georgetown Law, thank you so much for joining us.
Thank you.
All right, still ahead, Microsoft co-founder Bill Gates on education during the pandemic. It is a much different world than last year this time as kids return to school. What is tech's role in learning? That's next. This is Bloomberg. For months, educators, health experts, and weary parents have debated how to return children to school and how to do it safely. But with COVID cases still rising in some regions, Microsoft co-founder and philanthropist Bill Gates says that many schools and universities are not organized enough to safely reopen. He spoke exclusively with me in a wide-ranging interview on Bloomberg Studio 1.0.
For kids up through even 8th grade, the data suggests that if you make sure that you give the elderly teachers or teachers who live in a multi-generational household and therefore necessarily exposed to elderly people, if you figure out how to, have them work at the remote high school level and bring in younger teachers without those risks, I do think there's a huge benefit for the younger people. So we ought to be talking more about some age distinctions here. In places with the heavy epidemic, which sadly in the U.S. is a lot of places, high school and college are not going to get organized enough, and the disease transmission rate is much higher as you get up, past, say, 14 or 15. So, it's everybody's scrambling because this is all being done so much at the last minute, where some people, thought the cases wouldn't be raging at this point and didn't really help us think it through.
Well, and this shift to remote work and school is dramatically reshaping companies and families. And I wonder how you see that having a lasting impact on society.
Well, there are great things like telemedicine that people are been open-minded to because they've kind of been forced into it. And there's ways to shape that for lower cost and higher quality. The notion broadly of how many office workers need to go into the office, how many, which weeks, which days, how many hours, that's going to get a really big rethink business by business. And, you might reduce the total commercial space needed pretty dramatically and take some pressure off of these inner city cores where the rents and traffic are very problematic. And so, we're not going to do as much business travel, I don't think, because, people have been forced to learn Zoom and Teams, and the R&D on those things is going to make them way better, even just a year from now than they are right now. So it's like 10 years of innovation into this digital realm with medicine, e-commerce, meetings, compressed into, less than 2 years. And so that will upend, certain tax models and real estate models, and how far it goes is still a bit of a question.
I've been following how Melinda has been talking about the impact this is having on women and families. She's been very outspoken about how you and her have navigated work-family life. And I'm curious how you're navigating this time. There's this feeling in the home of whose job is more important, mom's or dad's. How do you answer that question?
Well, I'm very good at doing the dishes. I'm not as good at preparing the food. So hopefully some specialization kicks in there. Our kids are older, so we're really lucky. We've actually gotten more time with them than we would have under normal circumstances. And obviously, we have a lot of room in our house and a great internet connection. So, our case is atypically nice, and I've, tried to make sure it's not loading her. But I think it's great she's speaking out, because if you're a single parent, if you're, in a small space, this is a, hugely difficult thing, and it's even hard to measure how tough it's been, for those without, what we're lucky to have.
Microsoft co-founder Bill Gates there. Reminder, he will be joining me on Studio 1.0 tonight. You can catch him starting at 7:30 p.m. Eastern Time. And that does it for this edition of Bloomberg Technology. Up next, a special edition of Bloomberg Wall Street Week with David Weston. David will be taking an in-depth look at President Trump's economic policies with Larry Summers and Glenn Hubbard. Stay tuned. Wall Street Week is next. Have a wonderful weekend. I'm Emily Chang in San Francisco. This is Bloomberg.